In today's video, we're going to be having a look at the US GDP figures from last night, and in addition to that, we're going to be looking at the FANGs and their earnings results so far. Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'm going to be your host for today's trading journey. The first thing we're looking at today is on the US GDP figures that came out last night. It had a 32.9% contraction for the second quarter, which is one of the largest on record, for them at least anyway. Now, they were expecting to be a little bit higher with estimates at 34.8%, but regardless of the figure and whether it is better than the expected outcome, it's still an abysmal figure. In addition to that, whilst everything was expected for the GDP to be quite negative, what they weren't expecting was jobless claims to start rising again, nearing 900,000 claims. Now, it's kind of a bit of a triple whammy when we look at what's going on for the US at the moment. We had the dovish Fed earlier in the week, where they were indicating that coronavirus was part of the concern and was their leading concern for the economy restarting and stalling. So now we've gotten the GDP figures come out, that's been bad, and of course the rise in jobless claims in the areas where COVID has been hitting the hardest. That's all three in one go. And for the little guy down on the other end, there's also stimulus starting to wane. So we're not going to be seeing an extension. We might be seeing a new stimulus pack, but lawmakers are still arguing or at least trying to negotiate what that might look like. So for the little guy on the ground, he's likely going to be losing his income, his job, and then he's going to have a very big income squeeze coming from all of that together, meaning the economy has certainly stalled. So those fears of it all coming and the idea of live data that was anticipating the stalling of the economy with these results from the Fed and US GDP, and of course the jobless claims, puts it all together to be a pretty tightly wrapped bow for the economy being pretty bad. Now, moving forward, we are looking at a few different FANG members today. Alphabet, their revenue has dropped for the first time in 2 decades. Ad sales were down 8.1% as the leading contributor towards that. Their net income has dropped 30% and their earnings per share has dropped by about $4 down to $10.3. So whilst we're seeing ad revenue and ad sales on this side of things going down, we are seeing it prop up in one of the other FANG members, but we'll look at that in just a moment. Looking at Apple, Apple has actually absolutely crushed the forecast. The expectations were for $52 billion in revenue in the June quarter. Instead, they reported $59.7 billion for the June period, which is a record for them. Now, stocks have jumped 6.3% at the listening to those results, and shares over the last 12 months have also surged 80%. New iPhone releases are also slated to be paving the way in the next couple of weeks, so expect to see some more good things from Apple in the next coming months. Now, looking at Facebook. Facebook has actually said that the ad revenue has jumped, which is a bipolar counterpart to what we've seen on the other side with Google. So that's a bit of a problem, or Alphabet, if you will. They've had the issues there where it's seen one side is reporting better ad revenue whilst the other is reporting a decline. Now, Facebook's revenue hit $18.7 billion compared to a forecast of $17.3. So again, it beat the expectations. And their active users also slightly increased. So there are two things here counterplaying that are helping Facebook increase in revenue. And all of this has been happening while they've been having this little consolidation period, and they've had this Congress meeting that's going on where they've all been interrogated quite heavily. Amazon, Alphabet, Apple, and Facebook have all been releasing their earnings this week, but they've all been attending this Congress meeting. The Congress meeting that I spoke about yesterday really sees that their influence and their power is out of control and it's unfair to competition. And they're citing some of the instances where, particularly in Amazon and Facebook's case, they have actually beaten down a competitor and undercut all of the sales that they might have had to eventually take them on as an acquisition. So it's almost like a hostile takeover in that sort of sense. Now, even though that's the case, they've actually increased their total market cap combined value by $250 billion one day after the Congress interrogations. So it is quite an odd scenario to see where we've got one side that looks like it's negative data, but the revenue has just outperformed yet again. So we're going to have to monitor that situation quite closely because Congress may in fact decide to do something about that. If they are seeing that the competitive nature is being eroded and that these companies are becoming more of a monopoly, then there's no chance for competition at all to enter the market. So in that case, they may not see that as favorable and they may decide that they want to change how some of these companies can be operating in the future. Now, looking at the news ahead, China manufacturing PMI is going to be on. We've also got CAD GDP or Canadian GDP figures for the month-over-month basis. And the big one for me that I'm going to be watching is the University of Michigan consumer sentiment for the US. So keep an eye on that tonight, but otherwise it's a pretty light day. Now, if there's anything from today's video you've enjoyed, or perhaps one of my other ones, please feel free to get in contact with me at talk2al@acy.com. And of course, don't forget to like and subscribe to this video so you get more great content from me and ACY Securities in the future. Have a great trading day ahead.